Well, hello everybody and welcome back to our special weekend edition talking about stock, commodity and crypto markets and the key levels that we need to be watching for the week ahead. It was a risk-off week in the previous sessions, and that meant that the Nasdaq has now gone further down than the S&P 500. But in these times, we need to look at certain key indicators and leads to figure out whether this market's about to collapse and crash or whether we're still going to rally. There's so much at stake, and it really comes down to a few charts. So stay tuned as we cover all of those right now. See you soon. Well, welcome back everybody. And if you like stocks, cryptos or commodities, remember to subscribe and of course smash the like button today if you find value in the video. We'll start off here with the heat map of the S&P 500. It gives us a good idea whether it was risk on or risk off. And clearly it was risk off. Technology copying another bad day, while financials, healthcare and energy held up relatively well. Let's better understand what actually occurred. The market started off poorly, rallied through the start of the session, and then started to drop off, specifically the Nasdaq, which went back down to the lows of the day. You'll notice some sneaky business going on right at the close with a little rally here. That was very sneaky. They actually hit the max pain again this week almost perfectly for the S&P 500. We'll take a look at that soon if you're not aware of what it is. We go through the sectors and it was another day of mostly defensive sectors doing well. Energy, gold, agriculture, financials, healthcare. As we mentioned, these were the ones that were doing very well. Things like XLP, consumer staples, and utilities were just having a great week. And that's unlike them sometimes, but it does show the defensive rotation of the markets. Remember, most of us have begun trading usually looking at technology. That is only one section of the market. Understanding rotation and sectors and money flow is paramount to trading success. And it is something we do teach in some of our courses, including the mentoring. Let's now talk about Federal Reserve increasing interest rates and what tends to happen. What a great chart here shared in the community. Basically, it shows what the expectation is after 12 months and 6 months later. Here's where things get crazy. If the Fed changes rates of 51 to 100 hike, look what happens in the 12 months and the 6 months later. Now, obviously that's a huge hike. Usually the hike will be around here, but it's interesting to see what happens 6 months and 12 months later after these initial hikes come through. Very interesting stuff here in terms of increasing interest rates. Something to keep in the back of your mind and to have on your charts. We also need to talk about this current environment. Are we in stagflation? Are we in inflation? I mean, we all know that we're probably in some form of inflationary boom. That is, inflation's out of control. The real question is stagflation. And many people have said, well, where do you put your assets? Where do you put your investments in those circumstances? Usually, it's pretty easy. I mean, really, whenever you see inflation and stagflation in the future, one of the go-tos for many people is commodities. And when you think about it, what has done well in recent months since the start of 2022, commodities have done incredibly well. If you also think about it, if you get stagflation correct, which is very difficult, and we'll talk more about that in the channel and moving forward in a couple of weeks, then gold actually becomes one of the best asset classes to own during that period of time. Interesting stuff here, and certainly a little bit outside of what a lot of people are used to doing, which is mostly, again, tech, hyper stocks, Nasdaq, that kind of thing. Let's talk about the S&P 500 for April and moving into the Easter week. So we know that this is, of course, going into an Easter long weekend. Theoretically, markets usually move bullish during those weeks. You can see here over the stats of many years it has been. The last year it didn't do that though, was actually 2018. And of course, that's a midterm election year. Look, we've been talking about April being one of the strongest months of the year. And at the moment, because that's an S&P 500 stat, the S&P 500 is technically holding. But here's just some interesting stats over the last little while. Why have we been talking about it? Because of course, we expected that March rally into April, and hopefully near the middle to late of April, we would start to see the decline in the market. Now, Nasdaq is going earlier, and we'll find out whether it's actually breaking to the low and fully critical, or whether it's right on, I guess you would say, the doomsday in terms of whether it does crash. So we'll take a look at that very, very soon. But the S&P 500 is holding better than some people would expect. Now, why is the Nasdaq just absolutely getting obliterated? Part of it is because this US 10-year and 2-year are getting out of hand. Inflation is certainly not being kept under control. We've seen this in the US 10-year for a while now, and it just keeps rising. I mean, we're now sitting at 2.7%. and it may not top until it hits 3. I mean, you're looking at this here, and if you think about it from a technical standpoint, it doesn't look like it's slowing down. It looks like it's accelerating, and that could put further pressure on risky assets, that is growth assets. At the same time, you would think, oh, well, wouldn't the VIX be spiking? It actually isn't, because remember, the VIX is based on S&P 500 volatility, and that market is different to the Nasdaq right now. We saw the tweezer, and what do we get? The dreaded long leg doji on the daily here for the VIX, or the fear index. That's unfortunate, because it means that, of course, we don't know until we break either below or above whether risk is coming heavily on or risk is actually lowering, and therefore maybe we can go bullish a little bit here in the markets. We'll continue to watch that one, but the Nasdaq sitting on it. Also, some interesting things on the dollar. So we've noticed that the US dollar has been strong for a couple of days. Often when markets are confused or they're coming out of risk, they'll go into the dollar at least temporarily. They'll go into gold temporarily. Remember, gold is technically a currency, and that's part of the reason why that happens, and we'll look at that soon. So the DXY broke out above, showing a potential here of a little bit of risk off. Since then, it has actually happened. Risk off has manifested itself in hyper stocks and in the Nasdaq. So this is something that's happening here on the DXY. But I want to talk about gold because it looks like it may have actually broken out. So let's look at the 2-hour chart here. And gold broke our descending triangle here. And that's a big deal. I mean, if you think about it, it basically did the consolidation coiling. It broke the series of lower highs and got above. If you were trading this during Friday, absolutely more power to you. That's a very good level. Here we have 1947, previous resistance. So for a lot of bulls, they'll be looking for just a follow through here or a pullback to allow them to get back in. Possibly those lower highs will now act as support. 20 moving average sitting there as well on the 2-hour. And it looks like gold could be moving forward. Now, we've long theorized ever since this big parabolic run on gold that it may try to return. So that is, it might form a base like it's doing and then move up to the 61.8 fib to the 78.6 level, right around here, 2000 to around 2030. So is gold on that move? It certainly looks like it's very possible here for the week ahead. And it's one of those metals that's all of a sudden back in the spotlight with people showing interest in it. You can tell the market's getting a little bit more bullish on it. Where they're not necessarily getting super bullish yet is oil. Remember, OPEC meeting coming up. You have had bounces off the support, but we don't have the follow through just yet. Long leg doji here for the Friday close. Not too much information on oil. We'll type in natural gas because a lot of people have been looking at that instead, and natural gas continues to hold around resistance. So again, one that is unclear because it's hit those levels. Let's move over to stocks. We'll talk about Tesla. So Tesla closed the gap. Tesla closed at 1,025 and basically took advantage of the options for the week. Another one of these nasty stocks kind of just holding on. And why I call it nasty is because it's taking advantage of the retail psyche. That is the bull FOMO that happened. Everyone started plowing in call options. And of course, they were able to sell the market off from that point. So the gap's basically closed here. We've moved back through, and you'll notice the price action is incredibly contained between the 1,025 where it closed and the 1,000, let's call it 78, which is where the resistance is. We've got a coiling effect, and it's absolutely critical for Tesla to hold these levels. I'm not sure whether 1,000 holds up here actually if the market goes bearish through this level. The reason why is because the next big support is actually about 945, 950, which is this previous resistance over here. It stopped just before 1,000 and started coiling. So far, we've seen the price contained. It doesn't look good into the end of the week. You go to the weekly, I mean, that looks absolutely horrible as well. And many people, if you think about it, this is the type of thing that often does cause bearish busts. So I think day traders will really enjoy this week moving forward, because if we get rallies through these levels, or even we get bounces here, let's say you see something on your system that's bouncing around this zone, another take to this resistance could be there. If it breaks the resistance, well, it's risk back on. If it busts down here, it could be a serious sell-off. So there's a lot of stuff going on. And let's now start to look at some of the rest of the markets. Let's look at the options here for Tesla. Options kind of detail a very similar story. Where are the puts? Suddenly, the puts for the week ahead are actually sitting around that 950 on the low in terms of the first put wall. We've got call walls all over the 1200, and we've got a lot of smattering in between. Something we'll watch very closely this week, because there's so much at stake in this market. So options are coming back to our daily analysis for sure. Let's move over to Apple. Doesn't look good in a weekly. You look at this and you go, whoa, is that bad or is that bad? You know, rejection, technology coming down to a point of support. Let's now take a look at the daily here for Apple, and you'll notice it kind of remained contained between the two previous long leg dojis. Long leg doji indecision, long leg doji indecision. Apple could do anything, and that is always a bit of a risky market. It is on support. There is no real doubt around that. I mean, it is at a level of interest, but that weekly is damning. It has to kind of go bullish quickly next week if these are going to hold up. Very important. Let's move through some of the key indicators we're looking at. So the DAX actually held better than we expected. Weekly still, again, looks bad. I mean, that is not a bullish looking weekly. It looks bad on paper. Let's go down to the daily though, just to show you how all these markets are connecting between resistances and supports. Where's the support for the DAX? 14,000. Where's the resistance for the DAX? 14,322. The daily 20 moving average has been support before, is now resistance. This is what we were talking about last week. And if the DAX is able to close above this zone, I believe in some ways we could be looking at risk back on in the markets. And part of this is because it's going to go across all of them. All the markets are going to be showing something very similar. So the DAX here, 2 rejections, coiling in a range. Very interesting. If we break out of the range, maybe we start to get a little bit more direction. Let's take a look at the FTSE. Now, if you're not familiar, the FTSE is mostly a commodities driven and financial driven market. Look at this. It's going off into the sun, tweezer bottom here, or tweezer into bullishness. This is a market which is actually being heavily shorted by retail traders if you get the sentiment reports. Yet, does that look short on your charts? It really doesn't. Low volume, of course, people are hodling this thing. They're holding on to their positions, and it's just showing you the tale of two markets exemplified in that. Let's move over to XLF. So this is our spotlight sector of the week. The reason we're looking at XLF is, of course, we could easily look at healthcare breaking out to new highs. We could look at agriculture. We could look at some other ones that are looking incredible. But at the same time, we look at the financials and they haven't actually broken below. We have here a series of lower highs. It's kind of like a giant version of gold here. We have also a big rejection candle followed by bullishness in the Friday section or the Friday session. That's pretty important. You know, this is starting to look a little bit better. Check out the weekly here. The weekly actually rejected that zone, closed. Now, will people look for bullish movements through the next session high and through, of course, this weekly high? Absolutely, I think they could. Will there be problems here? Might be a test for it. So it's an interesting sector for people to look at that haven't been necessarily following anything other than tech. Just something to watch. Now, when we talk about risk on, risk off, I've spoken several times about XLY as one of the things I look at sometimes. Consumer discretionary, 1/3 of the US economy is made up of basically the consumer, and it's holding on for dear life. You know, it really is. And it's at the resistance, the supports, now the support in between the 38.2 and the 50 fib, just underneath the daily 20/50 cross moving average. I mean, you know where risk on comes back. It's here. We moved to fill the gap. But in this zone, I mean, it couldn't get more indecisive. This is a coiling market. Breaks below, it's risk off. Here we go. Back to 172 here for that, for the next level, and possibly even further down. If it breaks above, move to fill the gap, and possibly it's back on. So this is such an important zone here for these markets, and it just shows across the board. IWM not looking good on the weekly either, very sick. Go to the daily, doesn't actually look any better. So the small cap companies in the US, they're not healthy in terms of the way the market is showing them. We can't really get that much information off this yet other than it doesn't look good, but there's no clear zones other than the support sitting at 192. So just wanted to bring that up. Let's now talk about mission critical, the Nasdaq. Yeah, it's right on the 200 2-hour. It's still coiling within the range. You'll notice here, if you grab that low of the 14,320, like it's right there. Bond indicators slightly weakening, but remember, it's a tale of two markets. The S&P 500 is holding much better than the Nasdaq. It has been risk off and the Nasdaq is trapped. Where are all our resistances and supports? Let's get rid of this fib because you can already see it's on the critical 38.2 fib just underneath. We've got so many rejections coming off this 14.6 level. We've got so many buys, even though it closed right on it, coming off this 14.327. We're trapped within the zone. And that is what the story of the Monday and Tuesday session will be. We're underneath the 2050 cross. So we're underneath the 2050 moving averages. We're sitting at previous resistance becoming support. And there's not that much else to hold it, moving forward. Maybe it's held a little bit. But I feel like if we get rallies, let's say this doesn't come, let's say it comes through, breaches, of course, then it moves to fill the gap and maybe it's risk back on. But if it goes underneath here, it looks like most rallies will be met by selling demand. And that's probably the big one here. Let's go to the weekly. How does that look? I mean, it's really bad on the weekly. In many ways, people will call this an evening star pattern. That is a bullish candle. It's a three candle pattern, a bearish style candle, or at least very low decision making, and then a bearish follow through. Now, when it comes to testing a market, do I trust the Nasdaq in terms of the technicals or the S&P 500? I would always relent to the S&P 500 being the stronger technical. Let's take a look here. Does it have a very similar one? Yes. Is that bearish? Follow through certainly probably could be. I mean, that's what you're thinking about. Let's go to the daily. Okay, the daily is trapped. And this is where it gets super interesting. We have a support. We knew 44.50 was a support last week. We talked about it. We had 4,400 and 44.50. It broke underneath. It went straight to 44.50. It's bounced, created a long leg doji, indecision. It's bounced, created a long leg doji, or at least some indecision candle. And then it's hit the 45.20 again. If I was picking one market to be watching this week, there's no way I wouldn't be watching the S&P 500. It's such a critical zone. It's coiling in between, getting ready to either say we're risk on, we're going with the seasonal, we're going with April being good, or it's risk off, bad things are coming. I mean, that's what that weekly looks like. It doesn't look good. I mean, does anyone disagree with me? I don't know. But maybe if you've been watching technicals for a while, it's certainly one of those pretty nasty kind of candle formations. So this is what's at risk. And if you go down to even 5-minute charts here, and I want to even show you these on the real market, take a look at how it's interacted with these zones. Bam, buying, selling. And I know many members of the Discord community have been really focused in on these levels, and rightfully so. I mean, congrats to you guys. You've been looking at it. If you're interested, join our public group, link down in the description below or the pinned comment. And of course, if you're interested in our live streams, you can come to those in the private live streams. But look, S&P 500, it's trapped between the support and the resistance. This is, it's a pretty big deal. And I think that's something that a lot of people are going to be discussing. Let's talk about how sneaky Wall Street have been for the last 2 weeks. They have closed on the max pain literally 2 weeks in a row. They pulled it up just at the end there to get it as close as they could to the 449 perfect level. That's super sneaky of them. Where does the max pain sit for this week? So of course it's an earlier week. We've got the Thursday here for expiration, and it sits around the exact same level. So are we going to actually have another week of coiling? I certainly hope not. But the longer it coils, if that is what ends up happening, when the breakout happens, it's going to be fierce. And that's what's going to cause a big move. So the max pain, certainly something we're looking at. For the week ahead, there are a lot of puts sitting lower. We've got puts all over the place in the lower ends of the market. And I doubt we're going down to these levels this week. We're in a seasonally strong month. We're holding in a coil, and you just know that it's all at stake in terms of these levels. So yes, lots of puts sitting around that 450 pretty much probably being the first level of big support, 450, 445. Let's move over to the crypto world, because that's actually showing whether it's risk on, risk off right now. It's on previous resistance acting as support. Not too much clear direction here from Bitcoin. It has to kind of hold up here. And if it doesn't, where's the next stop? It's probably not going to be very good for the crypto market. So you'll notice the weekly, maybe it's not as dire as the other one, but certainly not good. Long leg doji. Is this going to be a decision made? This weekly is not closed. So you're probably hoping for a weekend rally here from Bitcoin. Are the big guys shorting it? The answer is no. BTC shorts, they're not in that going to the negative side in terms of they're not going bullish. So BTC shorts, you would think it shows you that the big ones are possibly purchasing this, which is important. Ethereum is still holding okay. If you're thinking, where are we out of the woods a little bit? That nasty daily close, you'd be looking for a closure above that. Again, it's not a market that looks incredibly great like it did a few days ago or a few weeks ago when we really were talking about Ethereum breaking out of its downward trend. That was a great rally. Now we come to decision critical, and this is what's happening with all these risk on assets. If you haven't already, come and follow us over on Twitter at FX Evolution. We always appreciate that. Thank you so much. And for the week ahead, the news. Okay, let's get into the news. OPEC all day on the Monday. Ooh, that's going to be big for oil. Then we have some big bits of information, and I would say the markets might be fairly large moves here. I don't know how it's going to move to it. None of us really do. We can speculate all we want about what this CPI number is going to be, but that's coming out 8:30 a.m. Tuesday. So how the market interacts with that, oh, that's going to be a big one. And then we move through US PPI coming in Wednesday, April 13th. Then we keep scrolling down and we have even more information coming out everywhere. We've got core retail sales coming out of the US on Thursday, April 14th, and then Friday, obviously, bank holidays, but we've got a treasury currency report. So it's not a small week in terms of news. We have several critical data points. Most of them are going to look pretty bad on paper, you would think. I doubt they're going to look good. They're going to look bad. It's just how does the market want to actually react to those? And the coil might be the real decision factor. Thanks so much for watching. If you enjoyed today's video, please subscribe, smash that like button, and we wish you all the best for the week ahead. It's going to be an interesting one. And remember, 2022 is the year of the trader, and we're seeing that more and more and more. Catch you for now.